Damn, and just when I was wondering where all that AMC money was coming from. This one ain't that bad though. This one ain't that bad though. I'd rather be here than AMC. Looks like they typically, under normal circumstances, would operate with a profit margin of roughly 11, 7, and 4%. So they were dwindling a little bit. Movie industry, according to these numbers, would say it's slowing down. But actually, you would also recognize the massive increase in revenue. So more like their expenses were increasing a little bit. Yeah, from 100 million to 200 million. This is an example of a company that would have had the opposite of the Corona effect, right? So it's doing all hunky-dory, but once Corona hit, this is an example of the type of company that would have been hit the hardest. So now that an opportunity has kind of been carved out in this stock, where does it go from here? Does it get lower than having to close all of your facilities? I think Europe is still in lockdown, which might explain the current price action on this ticker. Certain parts of Europe, you know, depending where you're at. No dividend, unfortunately. No dividend. Technical difficulties. A lot of risk, a lot of reward here. Honestly, I wouldn't mind some shares at like 23. Wouldn't that be nice, eh? Those people are having a great time right now. Even from 37 to 1924 is a pretty steep risk to reward ratio. Even if you were to put in some bids at like, let's say 36 bucks, you're still risking like 40% downside, but for a potential return of 700%, that would be quite ideal, right? I think that would be a pretty well-balanced risk to reward relationship, but you know, this is something you'd have to recognize. So with something like this, it's very volatile, quite obviously. Otherwise, you wouldn't be able to get the return that you're hoping to get, which is roughly 700%. So when you're entering this position, you got to recognize that the value of that position is going to move. It's going to be up, down, and you really just are playing against time. As long as nothing unforeseeable happens with the company, this could be a pretty solid place to be if you get a good entry. But again, like, let's say you put your bids in at 36. Why would you put them in at 36? Because other than these extraordinary circumstances, being your initial fall and then this false bearish breakout, which, man, if I was caught up in that trade, I'd be mad. But you'd have a higher chance of getting filled at like 36, 37 as compared to 19. You'd have a much lower chance of getting filled on this order. See, we're not just planning where we're going with our stocks, we're planning where we're entering our stocks. I quite like this one, but it's very volatile, so you just need to recognize these things. You could argue there's a tiny price channel here. You could argue that the real price channel is anywhere from 20 to 100, which is significant in itself, but the real move, which is staring us all in the eyes, would be the move from the 20 to 30 range into that 200 to 300 range, which sounds massive, but it's done it before. 800 million valuation. What company was it we were looking at that had the 100 billion valuation that did not have an equally valued set of technical indicators? I'm just saying. As far as derivatives go for this, are there any? I feel like there are. Look at that. Look at that. Ew. So, in good faith, I cannot recommend either of these two derivatives. This is the better of which, and it looks quite bad. 13K volume on the day. Looks like some markets just open and close. Yeah, no, don't touch these derivatives. That being said, though, if you do have access to the LSE exchange, which some of you might, some of you may not, CINEWORLD might be interesting to take a look at. This is for maybe your more advanced traders. I don't know why it's not showing the price history prior to 2018 over here, but These Frankfurt and Dutch and all these various exchanges seem to also have derivatives known as DQ6. DQ6 is a little easier to recommend than some of the NASDAQ related derivatives for those of you who may have access to those exchanges. I would recommend just getting the LSE shares though, if you can. That's what I would do. No dividend. This is a